Hello, everyone. We are going to get started. My name is Hongyi Chen, and I'm Academic Director for Master of Finance, and also Assistant Professor at Zhejiang University International Business School. Many thanks of you to join us and following us online today. Also, thank you very much for our distinguished guests. We are honored to have Ms. Paul Musoke and Dr. Joseph Lee, Mr. Pawi Nano, and Mr. Chris Chetty to join us. Welcome all of you to the webinar. So let me also take the opportunity to express our gratitude for Ms. Zhao Hezhen, who is CEO of TMT Post, one of leading Chinese media, and her excellent team. With their support, our webinar could be live streamed and accessed by larger population in China. And finally, I do want to also recognize the effort of my colleague, Lu Yinni, Yang Yinzhi, Shen Li, and Jiang Ripeng for all their effort in coordinating today's webinar. So this is the nice time for us to conduct the webinar series. We have around 120,000 audience following our last live stream webinar. Last week, we had pleasure to invite Ms. Ann Keynes, the Vice Executive Chair from MasterCard, and also her colleague to join us. We were discussing the fintech involvement of MasterCard and also how they could contribute to the society during the pandemic. Particularly, we pick up the example, how could the MasterCard to become provide infrastructure for utilizing the health code and let people recover and also get to the business travel as usual as before. So in my remark today, I would like to start by telling two short stories. The first one is the story of the first remarkable innovation in payment, and that is the introduction of paper money in China. So paper money was embedded in China as early as 10th century. The merchants seeking to avoid carrying around heavy coin and began issuing IOUs written on mulberry bark, which is a kind of paper, Asian paper. So when Marco Polo, the adventurer who traveled and arrived in the mid-13th century to China, he was so amazed by this invention, and that he even devoted and wrote an entire chapter in his book. But the first remarkable innovation in payment automatically ended in a leap backward. By the mid-15th century, China had eliminated the paper money entirely, and because the Chinese government had issued too much money and the counterfeit was so rife and common. Ultimately, a mismanagement of the new invention resulted in what was perhaps the world's first hyperinflation. So China didn't adopt the paper money again for several hundred years. Although paper money eventually made a comeback, but it took a couple generations. So this is the first story, and the second story I want to share is related to my personal experience. For many, if not all of you, the fact that the way we pay has been changing significantly will not be a surprise. About a year and a half ago, I moved from Cambridge to Hangzhou, which is the city where Alibaba and the Ant Financial headquarters, and it is also the location of our university. What happened is that I stopped carrying a wallet with the space for my cash and the debit card. All I need on a daily basis are only my phone, my mobile phone. So without question, technology are quickly changing how we live, how we work, and even how we invest. But it also poses another challenge. That is, I feel always anxious when my phone shows the low battery because I could not do anything without my mobile phone. So the COVID-19 has accelerated this trend. The temporary closure of shops and the restaurant, or the desire to socially isolate, led people to increasingly turn to online shopping. And many shops are encouraging contactless form of payment over the use of cash around the world. So as many of you might be aware, the pervasive M-Pesa technology facilitates payment for service and money transfer on very early generation mobile phone. So financial inclusion rate have grown dramatically, and the crime rate have dropped down substantially since the introduction of that technology. So I think it is timely to have the discussion on today's topic, mobile money in Africa, its genesis, growth, and impact. And more importantly, to have the insight from experts of SFD Africa, one of the leading regional institutions around 28 countries. So I believe today's webinar is unique situation to have such discussion. So with that, I want to turn to our distinguished guests. We have pleasure to invite Mr. Paul Musuke, our keynote speaker today. Paul is Director Financial Institution at FSD Africa. He worked with financial institutions in the banking, insurance, and the fintech sector across sub-Saharan Africa to design and implement transformation strategy that enable them to reach underserved market. Prior to that, he worked for African banking sector for more than 20 years. So next to Paul, we have Dr. Joseph Lee, the lecturer in law and executive law school. Prior to that, he was also a lecturer in business law at the University of Nottingham. He specialized in company law and governance, financial market regulation, commercial law, and arbitration. So next to Joseph, we have Mr. Paujavi Nano, the lecturer in law at Thammasat University, one of the most distinguished law schools in Thailand. He is also research affiliate of Cambridge Center for Alternative Finance at George Business School of University of Cambridge. He was visiting researcher at Max Planck Institute for Innovation and Competition, and also National University of Singapore. So next to Pao Yi, we have Chris Chetty, the researcher from Human Science Research Council at South Africa. So his research is focusing on fintech, the big data, digital divide, BRICS research, and the sustainable development goals. Prior to that, he has more than 10 years of work experience across both public sector and the private sector. So we will start from Paul to have his keynote speech, followed by a discussion joined by Joseph, Pao Yi, Krish, and myself. So Paul, the floor is yours.
Thank you very much, Chen. And I'm very happy to be presenting here at Chenjing University. I hope I'm saying it right. If I could have the slide up. All right, so thank you very much. So like I said, Paul Musoke is my name. I'll just give you a brief introduction just as a background to this presentation, that I worked in the banking sector for 21 years. I ran IT in one of the banks, I ran operations, and I also ran retail banking. I also ended up as a chief operating officer in another bank and a deputy managing director in another bank. I've also for the last 6 years worked with FSD Africa, and the whole idea was how do we sort of replicate new ideas coming out of one part of Africa and helping other institutions across the other parts of the continent to replicate them. So my 27 years of experience, in a way, are reflective of the journey of mobile money in Africa. So basically, I was there at the beginning, it was starting. I played a role in competing against people like M-Pesa, but our initiatives didn't work as well. And also, I've worked very hard over the last 6 years to ensure that other institutions across the continent are replicating this. So basically, I've been there, I've watched it, so I'm sharing my personal experience with this journey of mobile money. Okay, can you go to the next slide? I think to understand mobile money, we have to look at where the environment was like that enabled mobile money to actually come up as a sector within the continent. And that's in the late 2000s, where I'd been working for about 10 years at the time. It was mainly run by multinationals. It was a small sector, but run by multinationals. And we were really focusing on niche kind of customers, high net worth and corporates. There were some government-owned banks who were trying to serve locals, but they are very inefficient at the time. Around that time, IMF had imposed structural adjustment programs on African economies, basically. So a lot of banks being sold and lots of money or investors coming in to buy banks and trying to change them. We didn't have much of a payments infrastructure. ATMs were just coming into the continent. I remember ATMs used to cost us $20,000 fully installed, $20,000 fully installed at that time. So it was really a very high-end kind of offering. And card payments were hardly there in most of Africa, apart from South Africa. There was an increasing focus on personal and business banking, which wasn't there before the 2000s, because of the new investors buying banks and trying to sort of like serve a different market segment than the high net worth and the corporates. And around that time, that's when telcos were coming into the sector and trying to establish themselves. They were still very high end, very expensive, and not the ordinary man wasn't using them, but the telcos were quite quick in scaling downwards towards the common man and basically creating access, at least to telephony technology, which was the basis for forming M-Pesa in the long run. So it's just important to understand that the basis at that time was that a lot of people were excluded out of the formal financial sector by the banking sector at the time. And for those who are looking correctly at that sector, there was an opportunity for them to create something that could unlock this potential of probably 70% of the population at that time who are locked out. Okay, next slide. So before we go ahead, just to explain, just briefly, just to make sure that we're all on the same page about what mobile money really is. There's sometimes a confusion about mobile banking, which is really someone using a phone to access their account. And then mobile money, which is more about being able to create a wallet on someone's SIM, being able to create electric money by depositing on that wallet, being able to transfer the money from one wallet to the other, or even in some cases from one wallet to a bank account as well. So the difference between mobile banking is that it was restricted to actually what was already in a banking sector, who had accounts in a bank. What mobile money did was enable financial institutions to reach people who could not have bank accounts at that time and could be easily reached on their phone. And that really was driven by not the banks, but by the telco at the time. So it sort of opened up a new sort of blue ocean opportunity for people who actually thought differently about less or lower income people within Africa. Okay, next slide. And the famous story about M-Pesa, we all know that M-Pesa was the first mobile money solution anywhere in the world. And I just talked briefly about how it started. So initially, there was a microfinance bank called Faulu, Kenya. And Faulu was focused on lending to farmers in rural areas of Kenya. So what used to happen, Faulu would lend to these people, but they would fail to make payments, even if they were willing, simply because of the distance they had to travel to move money to the banks. So Faulu saw an opportunity when UK's Development Finance Institute for Development, DFID, basically did what we call a challenge fund. So what they did, they requested for good proposals that they could finance to help increase access to finance. So Faulu and Safaricom, owned by Vodacom, sort of teamed up to come up with this solution. And how could they help these farmers to be able to make repayments for their loans without the inconvenience of having to travel long distances, because the product was actually dying out, wasn't really working. At that time, 54% of the population in Kenya owned a mobile phone, so it's a good opportunity for both Faulu and Safaricom. And what happened is that, yes, people started making their repayments to the microfinance using the solution, but then Safaricom realizes that beyond that, they're actually exchanging money amongst themselves. So they're exchanging electronic money amongst themselves, not even just paying the bank. So then Safaricom says, okay, fine, now let's set up agents within those areas so that they can actually cash out and cash in their money. And really that was the beginning of M-Pesa. But what really kicked it off, and I guess sort of similar to what Cheng was talking about, the impact of COVID and how it's actually impacting usage of digital finance, is that there was an election violence in the 2008 election in Kenya. And what happened is that because it was really a bad sort of like 5 days in Kenya where people were killing each other, and you couldn't move from one region to the other. So you couldn't actually move to see your parents in the village or your sisters in other parts of the country. So M-Pesa became a solution that people jumped onto to send money to their relatives wherever they were to help them sustain. And like they said, the rest is history. So that's really how M-Pesa came to be about in Kenya. Next slide. Okay. So talking about the growth, I decided to use this graph from GSMA on the State of the Industry Report on Mobile Money 2019. Just to reflect. We okay?
So sorry, Paul. 太媒体的同事麻烦麦关一下。Okay, I think now it's no problem. Sorry for that. Yes.
All right, thanks, no problem. Yeah, so basically, I just want to reflect with this slide, basically where growth has happened across the continent. So, of course, the initial mobile money solution was in Kenya, but we've seen that in East Africa is where it has actually picked up a lot more than the other regions. So we see Uganda, Tanzania, Rwanda, Burundi to some extent as well, really have picked up, and we're looking at about 249 million registered accounts as of 2019. Of those, 102 are active. As you can see, basically there's still growth, at least about 10% across those various countries, and the amount of money that is transacted in US dollars within that region is about $293 billion, and it's up by 24%. So what we're seeing is that there's more usage and more people coming on board, but at least the usage of the solution is growing. The next one that we're seeing that is actually showing growth after a lag, because West Africa took some time to actually pick up. But somehow over the last 5 years, we're seeing significant growth happening within that region, driven mainly by Ghana, Ivory Coast, and Nigeria is starting to show potential. But we're seeing that that's the area where we're expecting the next 5 years to see really significant growth within mobile money usage within the region. As you can see, they're transacting about $130 billion within the system and growing at about 35%. So that's a pretty big jump. But we're not surprised because we have been working very hard to sort of push West African banks and telcos towards that direction. It's just taken a bit longer to get there, and I'll touch on some of the issues there. Central Africa is also promising. So those are the Cameroons, Central African Republic, Congo. We're also seeing some growth there, and according to GSMA, that's probably where the big growth is really going to kick off in the next sort of like decade or so. The potential is high, the infrastructure is poor for other types of payment systems. So lots of potential there, and you can see it's growing at about 32% in terms of value of transactions. Now, Southern Africa is an interesting one, which one is dominated by South Africa, which already had a developed payment infrastructure by the time M-Pesa was originated. So the environment wasn't as fertile for it to take off there. And actually Vodacom tried to introduce M-Pesa there, and it didn't quite take off. I'm not so sure if they reintroduced it, but I think at one time they had pulled it out of the market. Now, South Africa has a big impact on the rest of the region as well. So what happened is that, it didn't really spread into Zambia, into Zimbabwe, into Mozambique as quickly as we would have thought it would. But I think the other factor about Southern Africa is that a lot of the countries are large countries with small populations, and they're sort of like dispersed kind of populations. They're not as concentrated as in East Africa. So you find investing in infrastructure to reach areas where there are few people is high. It's diseconomies of scale that most players are not investing into that. Northern Africa has been a bit slow as well, and I think, I'm not so sure, I don't know that well with North Africa, but I think it's because they also have a developed payments infrastructure because they're close to Europe. It has tended to be a bit slower, but we're seeing sort of growth around Egypt and Morocco, and these statistics have a bit of Middle East. So Afghanistan also is showing signs of growth as well. So according to GSMA, they think that there's going to be big potential around mobile money going forward across the whole of Africa. Okay, next slide. Okay. Yeah, and I guess one of the big things around mobile money and how it has been able to grow or not grow in Africa has been around regulatory approaches taken by the various regulators. So they are trying to balance three things: enable innovation, which Kenya demonstrated quite effectively, but also avoid unfair competition. The thing about mobile money is that it requires a lot of investment upfront. So those players who invested early actually tend to dominate the market. And the regulator is trying to see that there's some balanced kind of competition to avoid exploitation of consumers as well. At the bottom of that has been know your customer requirements, which basically have been a big thing since the bombing of the Twin Towers. And most financial sectors have been trying to find ways of developing identity of customers for financial institutions. And to some extent, mobile money was targeting lower end customers in countries which didn't have digital or national IDs. And it was a bit difficult in terms of getting customers on board with the standard KYC requirements. So there were regulators who started working on simpler KYC requirements to enable people to actually get onto the mobile system. So to some extent, it took a bit longer in some countries, a bit faster in others. Just some examples: in Kenya, the central bank was very supportive of Safaricom to innovate and try out new things without holding them back. I think the regulations in Kenya only came into effect after about 7 years of operation of M-Pesa. If you go to Uganda, they actually tried to develop regulations before they allowed mobile money to start working, which delayed the whole traction of the solution, I would say, for about 4 years at least. The same thing happened in Tanzania. If you go to West Africa, quite interesting as well, Ghana tried to insist that every mobile money operator should have at least 3 banks they're working with or signed up with before they get a license. Now that's almost impossible. And they had to pull that back after about 2 years and say, okay, fine, you can work with one. When you go to Nigeria, they basically tried to make it a bank product. They said, no, mobile money should be owned by a bank, driven by a bank, but leveraging the rails provided by the telco. Again, it didn't quite work out because banks trying to protect their own positions within the financial sector that they were managing. So there have been some changes here and there, and we see sort of like a kind of uniform thinking developing around regulators about what support it. Yeah, I think we're sort of getting there, and we're enabling growth of the mobile money sector through regulation at this particular moment. Okay, next slide, please. Okay, so basically talking about impact. I think the biggest thing for mobile money has been the kind of side products it has enabled to happen, leveraging the rails that were built by the telcos and their wallet. The first one really was around credit products. That was really the big one. So you have credit products provided by banks across the continent, but mostly the examples here are for East Africa. So you have a product called Mshwari, which was introduced in 2014 by a bank called NCB Bank in Kenya. And it's really a partnership with Safaricom, where they use the data of the user on his wallet and how he buys his airtime to determine how much the person can actually borrow for. And it takes about, I think, probably 2 hours for them to do the assessment and lend you the money, and then you basically get access to it. And what it's doing here, it's mostly used by market traders who buy goods in the morning, they borrow, they pay for their goods, they sell them during the day, and they pay back towards the end of the day. So KCB M-Pesa is similar to that. MTN Momo in Uganda is similar to that as well. If you look at Fuliza, that one is run by the telco itself. So the telco is doing the lending and is providing an overdraft facility to anybody who has a wallet for Safaricom. And automatically, you know, when you deposit money onto the wallet, it sort of covers the overdraft. You have other independent players like Branch, you might have heard about them, Tala, and 4G Capital, who have come in. They're leveraging the credit scoring of the telcos to actually create their own lending solutions outside of the telcos or the banks. If you look at savings and investments, of course, the wallet is a big thing now. I've forgotten the value of deposits within the the mobile wallet, but I think it's about 10% of the total deposits in the whole banking sector, at least in Kenya. And that's big in terms of savings. But what we were seeing also, we're seeing other players coming in now to provide investment products for the retail sector to be able to invest into things like treasury bonds and bills and other types of instruments on the money markets as well. So that's what Mali and Zeno in Uganda are doing. And then you have also others who are encouraging pension savings for the lower end of the market. And again, leveraging the wallet so that they're able to collect from the wallet to create savings for informal sector. Next slide, please. Okay, then also the insurance sector has not been left out. I think the biggest there is Bima in Ghana, who are actually using airtime. Interestingly, we were allowed by the regulators to use airtime to deduct premiums. It's interesting. They deduct for premiums airtime and convert it into cash and pass it on to the insurers. And apparently they had reached more than 1 million people by, I think, 2017, something like that. Again, providing insurance services for informal sector and poorer people. Riziki is also another life product in Kenya, which enables people to save to cover for health for themselves and their family. And if they actually fall sick and they're hospitalized, there's a payment that goes to their mobile wallet for them to be able to cater for mostly foodstuffs at homes and whatever as they're out of work. Okay. Mtiba is similar. Pula is another insurance player who's using basically data to help insurers develop products for certain market segments which have been locked out. The same thing is happening with remittances. I won't go too much into that, but PesaLink is a bank. It's a group of banks who have got together and they're actually creating capability to move money within wallets and within bank accounts at a lower cost than Safaricom. Okay, and MFS is a remittances solution. E-commerce products, we're seeing a lot of those ones as well. M-Kopa is a off-grid electricity supplier. So basically it sells solar panels and lighting bulbs and things like that to people in the rural areas. And then they pay over time, but again, leveraging the wallet. They are collecting repayments from the wallets for these people. We all know about Uber and Lito and Bolt. I won't go too much into that. Jumia as well. And nowadays, more and more people are using M-Pesa to pay for utility services or mobile wallets to pay for utility services across the continent. Okay, next slide. SMEs have not been left out as well. Safaricom has something called Lipa na M-Pesa. So basically, at least in Nairobi or Kenya, I would not have to carry cash anymore to go to a grocery to be able to pay for goods. It's a till number that they have that they've created, and it's accepted by everybody. So if I want to buy a packet of milk, I can use M-Pesa. If I want to buy fuel, I can use M-Pesa. So we've got to a point in some countries where you actually don't need to carry cash anymore. It's more convenient, okay? And the others there as well, again, because of time, I won't go too much into that as well. I think another big thing that's happening, or that is leveraging, is around data analytics, because a lot of data being created out of this multitude of customers on these platforms, the number of transactions they are transacting, the number of airtime, the value of airtime they are buying, and how they are calling people, who they are calling. So it's building a certain visibility of a customer, which wasn't there in the past before. And that's helping a lot of other players to create credit scoring tools. Research is, I think, getting a lot more granular in terms of understanding certain dynamics around our demographics within Africa. And I think the important thing is that a lot of our customers from a financial point of view were invisible. Now this is enabling them to actually be visible, and we can understand them and be able to sort of like craft products designed for them. Okay, next slide. Okay, yeah, so just broadly as well to look at its impact on the financial sector initially. We're seeing a lot more people having access to financial services. Before mobile money came, it was about 30% access in Africa. Now we're talking about 80 to 90% in some countries of people who have access to financial services because of mobile money. It's definitely reshaping the banking and telecom sectors. A lot of banks now are changing the way they operate. The way I was doing banking when I started banking, and today it's completely different. They're all trying to be like a telco to some extent, whereas telcos on the other side are becoming financial institutions. So there's quite a bit of transformation and changes happening within the sector, which I think are positive. Employment, one of the biggest things around mobile money is that it has, or it's dependent on an agency network, okay? So in Kenya, I think they have about 120,000 agents who are serving mobile money. And that's something that wasn't there before. They've actually created jobs for those people. And they're actually now also leveraging them to sell other products like insurance or even loans or things like that. So it has created employment from that point of view. Also the fact that these companies are growing because of growing mobile money transactions, it's also creating employments within the companies delivering these products. Around people, yes, definitely improved savings capabilities, improving, I would say, resilience against shocks because of insurance products that are coming to the market. It's still early days, but at least in some countries, you are seeing people getting at least life cover to help them during those times when they fall sick or they lose a relative or they die themselves. Okay, and also enterprise. There's a lot of young people who are trying to develop new solutions around the mobile wallet and around digital finance across the continent. I mean, it's amazing how many people there are out there, and they really need a lot of support to make their businesses succeed. Okay, from a business sector point of view, so definitely new revenue streams, and what the telcos actually value or used to value most about mobile money solutions was that it helped customers to stick with them. If you have a mobile wallet, you will continue to be a voice customer. You won't switch to another one. So it sort of like kept customer stickiness. I think Safaricom has leveraged that very well in Kenya. It's very hard to move to another telco because of that. And of course, increasingly, we're seeing more governments looking for ways to tax these solutions, and probably it will open up another tax revenue source for governments. Global impact, of course, we're seeing Africa, of course, expanding in the rest of Africa, but also in Latin America, we're seeing models coming up that are sort of copying what has happened in Africa. And of course, you guys will know better than me what's happening in Southeast Asia around mobile money in Pakistan, in Bangladesh, and countries like that, and India as well. Okay. Next slide. Okay. What I think is going to drive mobile money going forward to grow even further. We're seeing a lot of the telcos moving away from just payments to providing sort of a platform model. So they're basically offering a host of services within their platforms as opposed to just focusing on payments as in the past. And there's heavy investments going into that. I think it's going to enrich the offering around the mobile money rails. We're seeing some interoperability. So there are costs engaged with sort of like different telcos talking to each other. So transferring money from one telco mobile wallet to another one, there are heavy costs that customers incur. And we've been pushing very hard for them to create some interoperability. So the cost or ease of transfer of money between wallets is not exorbitant and doesn't sort of give one player an advantage or not. So we've seen that happening in Tanzania, where the regulator forced them to have interoperability, and there was a big jump in the usage of mobile money solutions after that. I've talked about the amount of data that's available now. That's really going to change how we can create new products for this market. Increasingly, we're seeing more people using smartphones as opposed to feature phones, and that also creates opportunities for developers and also ease of use of the solution. And then in Africa, gradually we're seeing increased access to internet and also prices lowering gradually, but we think over time it's really going to change significantly so that everybody will have access to internet, and that will change the whole dynamic of usage of these solutions. Okay. Next, sorry. Next slide. Yeah, so as I conclude, so basically, it's sort of like a weighing scale. Is it good? Is it bad? I think all in all, it's been good for the African economies. I think it has helped better macroeconomic management. A lot of transactions which were sort of like not accounted for within the GDP are now a lot more visible because of the formalization of sectors that were locked out of the formal sector. I guess more financial stability as a result of that, because now the central bank and the regulators, the finance ministry, have better data on how they can plan for what's likely to happen, as opposed to the past when they were blind to certain areas. reorganization of industries. So we're seeing a lot of telcos, banks, mergers. We're also seeing new players coming in as well. But ultimately, I think for more efficiency in terms of economic performance. And we're seeing more, I think, enlightened regulators because of this. So definitely, we are seeing more positive initiatives around supporting the growth of mobile money or even other areas of the financial sector from regulators that we didn't have in the past before. Okay. From a negative point of view, couple of aspects. One is that there's been a tendency for monopolies to establish themselves depending on who started and who invested the most money. So definitely Safaricom in Kenya has about 70% of the market, and that's a big concern for regulators and the economy as a whole. In Uganda, it's MTN, in Rwanda, it's MTN. I think in Ghana, it's MTN, in Tanzania, it's Tigo. But you always have this one player who tends to dominate because it's so hard for the others to catch up because they had that first mover advantage. And that monopolistic aspect is trickling down into expensive solutions or products to the users. It's also a very intensive, very expensive kind of initiative to take on. So many players get in without realizing how much they're going to have to invest. But it has taken maybe about 7-8 years for the first mobile money solution to become profitable, and it's shot up again. We're seeing more and more being profitable, but it's a long-term game and it requires quite a bit of investments into it. High transaction costs. So we did some research on, on what someone pays in a month using mobile money. And it was actually quite surprising. They charge you small amounts for everything that you do, but when you add it up, it's actually pretty expensive. And there's a big concern there that maybe consumers are being exploited and taken advantage of. So regulators are trying to sort of like manage that. The other thing is that the agents, the margins they make out of the transactions that they do is also pretty small. In a way, because of the number of agents and the size of the agent network, the cost ultimately becomes big to the telco. But for somebody who's invested in the rural areas to provide these services, the margins they're getting are pretty small. And there are some concerns that maybe it won't be sustainable unless if there are more products coming on board that sort of increases their share of wallet out of the business. So basically, that's sort of in conclusion what I would say. But of course, it has been positive for the continent. It has put us on the map, yes, but also it has formalized a lot of our financial operations. And I'm very excited that the people I care so much about from an FSDA point of view are getting more and more access to services, and we should be able to enable them to access better services and products going forward. So thank you very much. That's the end of my presentation. So happy to take some questions or feedback as well that could help us improve our offering.
Okay, thank you very much, Paul, for your very informative and insightful information of your keynote speech. So I think that during the pandemic, I think that the mobile payment or the mobile money is not only like the solution for helping those the unbanking or underbanking population, but also is like the alternative channel for us to think about how could we adopt or introduce in our countries. So with that, I want to turn to Dr. Joseph Lee, as that you live and teach in the UK. I think one of like the origins that where fintech born. So we were very interested to get your perspective and also your feedback for Paul.
How long do I have? How long do I have? 5 minutes?
We can have some conversation back and forth.
Sure. Thank you. Thank you, Paul. That's very, very interesting, very informative, and I've learned a lot. But I can't really speak for African territories. I'm not an expert in that area. So I can only speak from a UK academic's perspective and talk about the things that we currently know and what we think the alternative finance, such as cryptocurrency, crypto assets, may may help transform our society and economy. And there are 3 points that we currently think. I mean, that's the discussion among academics. These are, the new alternative financing instruments may be helping sort of anti-corruption agenda, and this instrument could be used for stabilizing the finance, so it's anti-devaluation. And the third point is how new instruments can bring real benefits to the society in terms of education. I mean, you also mentioned about DFID's involvement in this initiative. I know that a lot of African countries are the recipients of foreign aid, and I was wondering to what extent the new these new alternative financing tools can be used to lower the transaction costs in terms of focusing on sort of anti-corruption agenda when the subsidy was received, and how that subsidy is then allocated from the government level to the department level and to the village level, that one can make sure that the resources, the money is used in the way it was intended to use. And secondly, around anti-devaluation, I know that farmers or people living in a poor area, and they work hard and then they receive what they should be paid, I hope. But oftentimes, because of the instability that you have mentioned, it's not just that they don't have temporarily access to finance, but also in the longer term, that's because of the instability that may cause the currency to devaluate. So one day that you can actually use the money to buy a cup of coffee, but then the next day that wouldn't allow you to do so. So I was wondering to what extent that we can start thinking about a kind of currency that could be anti-devaluation, which is more stable and also provides people in Africa, especially in a poor area, to be able to interact with the outside world. And I think the third point that links to the third point, which is education. And Paul, you also mentioned about data analysis, data analytic, and because of the smart technology that people are able to see how they spend, and by seeing how they spend, there may be some apps that would help them save money, help them to learn how to spend their money in a more appropriate manner, in a more efficient way. And I think there should be some apps that are developed not just for the purpose of other third parties to exploit further, but then to help to empower the users, the consumers, to know how they can actually manage their finances, so to take back control from either from the state or from other from the enterprises, or from other intermediaries. And I think that links to the final point, that with this e-money, a lot of personal information would be given to the app developers or other third parties, and we need to be very mindful with the issue of liberty. How liberty is promoted in Africa, and how people are conscious that their personal data may be exploited by others. And especially when we are talking about this new type of financial instrument, which is likely to be global, and we need to be very mindful that this new global initiative or this new financial instrument that is likely to be cross-border will not turn, will not become another agenda of colonization. The idea of this new finance is to transform our social economy and to give back controls to the people who work, rather than letting this initiative to be another form of colonization, allowing parties to exploit people further. Yeah.
Okay, thank you, Joseph. And I fully agree with you that the mobile application, they do help people. They can smartly to track how they spend their money. And I think that is also part of very important part, the financial education. And I think maybe through the application, we can maybe teach or maybe share the information efficiently. So with that, Paul, how do you respond for that?
Okay. Yeah, I think they're all good questions. And the good thing is that FSD Africa is really focused on financial sector deepening. So all the issues he's raising are areas that we're looking at to create really a more sustainable financial system across the continent. So M-Pesa or mobile wallet is part of it, of many other things that we're supporting. So just look at the whole issue around data, let's say data protection, about basically ownership of the data that's being used by various users or firms. I think, so what we've been trying to do is encourage regulators to come up with data protection regulations. So we know in South Africa there's one. In Kenya, I think there's one in process. It's going through a second phase of consolidation. But we're concerned that there are a lot of unscrupulous people who are able to get access to this data and play around with it. And it's quite scary, the examples that we've been shown. Someone comes to us and is selling a solution which we should support as FSD Africa. And he's actually going into your data and picking up who you transferred money to yesterday and whatever and all that stuff. So it's a big concern for us there. And as the data gets bigger and bigger, there's potential for abuse. So we're trying to encourage various regulators around the continent to come up with the right kind of data protection rules. It's not as easy as it would sound, because I think they have other interests as well. But we're putting it on the agenda that it should be something that they're looking at, because these are sort of like the after effects of solutions like that. Yes, around education, the big concern we have around mobile money, digital lending related solutions is over-indebtedness. So these people are being thrown with all kinds of offers from various players. And they borrow from this one, then they pay back this one, then they pay back this one. It becomes a cycle of over-indebtedness. And what we're focusing on is how do we actually help them to start thinking about credit that is useful in terms of creating an output that will make it sustainable for them and help them to grow. So a couple of the companies there that I listed, I think there's one called 4G Capital, who's come up with a different approach completely, in that apart from offering lending to these people, they're actually working with them to educate them about bookkeeping, because they're focused mostly on businesses, about how to do bookkeeping, plan for their repayments, profitability. So as they lend them more and more, they're ensuring that they're actually growing. But that again, Joseph, it's still a drop in the ocean, because a lot of the players are just looking for a quick buck, and they're just throwing money at anybody, whether it is Safaricom or it's the independent lenders or even the banks. I mean, I'm shocked sometimes when I get a message and they tell me I qualify for $1,000 loan. I didn't ask for it. They're just saying, no, you can get it because based on whatever it is that we see on your accounts and whatever. So that's an area that, again, we're trying to push, but still we're far away from that. About an anti-devaluation currency, I'm not so sure. That one, we haven't looked at it yet, I must be frank. But I think what I'd like to raise is that a lot of the people we're working with at the moment are not saving necessarily on the wallet. They're using it more about payments, convenience. But the solutions I've talked about, the investment solutions like Mali and Zeno, those ones actually are trying to encourage users to sort of invest whatever balances they might have in their wallets into some kind of instrument. So these guys are fund managers. So they help them to invest this money and actually assure them, and this is a return that is over and above inflation. But again, it's still early days. These are solutions we're trying to support, but they haven't quite scaled at the moment. But that's a direction that we see we'll be going towards. DFID funding, yes, yeah, I mean, the donors have funded these solutions for a long time, but I think there's questions around whether they should be continuing to fund these solutions without any signs of sustainability. And that's something that keeps coming up. We haven't quite found a solution for that, but the trend is that we should be enabling donor money to go to the people who need it most. Okay, so in some cases, it used to go to financial institutions who have big balance sheets and whatever, and then we use them to reach those poor people. Increasingly, we're seeing more about mobile money wallets being used to distribute grants to poor people in rural areas and whatever. So this time of COVID, DFID Kenya is actually in the process of putting in place a mechanism to distribute money to people who are mostly impacted by COVID using the mobile money rails. And then, yes, you talked about alternative finance and cryptocurrencies and yeah, I think a bit of finance and benefits. Okay, those are just examples, but I think you talked about other forms of finance which are coming up. And yes, cryptocurrency, yes, there's also crowdfunding also, which is also coming up as well, but they haven't quite picked up yet. I think we're working with Cambridge Center for Affordable Finance to see how we can bring these ones into the continent, but it's still early days. They haven't quite picked up as well as mobile wallet has picked up, but we do realize that there's a need to look at other forms of finance. And the truth is, mobile money might have worked, but it's still a very rudimentary solution. It's very, very rudimentary. We need sort of like bring something more sophisticated that could add value to the society we're supporting. I hope I've covered everything, Joseph.
Okay, thank you both Paul and Joseph. So with that, I want to turn to Paui. So Paui, as we know that you were conducting the ASEAN Fintech report with the Cambridge Center for Alternative Finance. So last year that you reviewed the Fintech regulation and to track the market development across 10 countries in ASEAN. So we would like to get your perspective. Do you see any difference between Africa and Southeast Asia? Given I think both of region, they are very, I think that is very excited in terms of fintech development. And also maybe what kind of factor do you see that is difference? So we would like to get your perspective. So, Paui, please turn on your microphone.
Okay, first of all, thank you very much for a fruitful and informative presentation. This broadened my perspective on the use of mobile money in Africa and also its far-reaching consequences. As far as I know, the number of mobile money accounts in some countries even surpassed the number of bank accounts. And IMF also explained the rise of mobile money. It came because of the financial inclusion problem. So I think this is very interesting because it also can reflect the way that you utilize digital finance to enhance the financial inclusion, right? And I really agree with you that we need a regulation. We need a regulation to mitigate potential risk, to support market players who offer innovative products and services. This is also to promote fair competition. And also this can deliver benefits for consumers through lower prices, greater choices, improved services as well. To monitor the compliance and to enforce the rule effectively is also even can be harder from the characteristic of digital payment or mobile money as you and Joseph mentioned earlier, because due to its cross-border characteristics, it also sometimes it's also not that an easy task for regulators or policymakers to regulate it efficiently. Compared to Africa, in terms of Southeast Asia, as Dr. Shen asked me the question, I would share the information with regard to the utilization of digital finance in Southeast Asia. As in Southeast Asia, financial inclusion is a significant issue here. The level of financial inclusion remains very low in a number of countries here in Southeast Asia. That is the reason why in the past several years, a number of countries in ASEAN, we started to utilize alternative financial instruments, including crowdfunding, P2P lending, and other mechanisms. To give an example, Malaysia is the first ASEAN country to have a regulatory framework on crowdfunding in 2015. To be more specific, for the mobile money regulation, a number of countries in Southeast Asia, we streamline our existing law and regulation to regulate such businesses. However, I need to say that, for example, different countries may set the different requirements and restrictions. In Thailand, we have the Payment System Act 2017, while in Indonesia, they have the law and regulations. But it sets the requirement that's different from Thailand or Thai law, because in Indonesia, if you look through the laws and regulations, you can find that Indonesia law also requires that the e-money transaction even need to be carried out by the financial institution, I mean local financial institution. This can explain why Alipay, when they enter Indonesia market, they also need to collaborate with the local financial institution. So actually, I want to point out that it is also very important for local regulators or policymakers, because you need to find the best regulatory practice, because even you want to regulate such businesses at domestic level, but sometimes it also can influence the foreign players that want to enter the local market as well. Apart from the regulation, a number of Southeast Asia countries also developing the eKYC initiative. The launching of eKYC, I think it also can be seen as an example of the way that we want to create a robust digital ecosystem in our countries. Lastly, in terms of mobile money transaction volume, in the past several years, mobile money transactions increased rapidly in Southeast Asia. Especially in 2018, the transaction volume increased more than 30% in Southeast Asia. Philippines and Indonesia showing the greatest growth in terms of non-bank e-wallet. So I think this is also the interesting information, because it seems to me that across the globe, developing countries or developing markets, we want to promote financial inclusion. But sometimes it's also not an easy task, as I mentioned, for not only for regulators or policymakers, but all stakeholders involved to support it at full scale. Yep.
Okay, thank you very much, Paul Yi. So, Paul, do you see any difference, I mean, between like your region and also where Paul is located in Southeast Asia, and maybe in terms of sector-driven for the mobile payment, what do you think that might be the important element? Maybe when one country want to adopt or introduce this mechanism into their country, what kind of factor? Maybe could you let us know maybe 3 most key important elements that you would like to suggest?
So I think the big difference I see with Southeast Asia is that probably they have a better developed payment systems environment. So yes, there's a need for financial inclusion, but my feeling is, if you're talking about Singapore or countries like that, definitely the level of payment infrastructure is a lot higher than Africa. So it makes it a bit harder, I think, to introduce something like mobile money in some of the countries. I don't know Asia as a whole that well, but that's what I know about some of the solutions coming there. I think being close to China as well, chances are that you're going to end up more replicating what's happening in a bigger economy like China than what we've done as in Africa, because the environments are a bit different. And I think, like Pawi said, is that about regulation. So it's regulators coming up with regulations that enable adoption of new solutions. So what I think that they have to sort of like stay ahead of developments around payment solutions, so at least they can help these solutions to catch on in the areas where they want to catch them on, especially around financial inclusion.
Okay, thanks for that. So with that, I want to turn to Krish, the researcher from the Human HSRC in South Africa. So Krish, I know that you prepared a slide for your comment. So please share with us, and we will also very much like to get your insight focusing on today's topic.
Thank you, Dr. Chen, and thank you, colleagues. So let me share my screen. As Dr. Chen from, how does fintech and mobile money contribute to promote financial inclusion, and how does that actually go about addressing issues of poverty and inequality, which is widespread across the continent? Thank you for the opportunity. It's great to see that ZIBS is also connecting with FSD. They do fantastic work across the continent, building the capabilities of the fintech sector. So I'm really glad to see that we are starting to link up in this space. I've prepared a few comments just responding to Mr. Musoke's presentation, but then also sharing some ideas about how I think we could actually go about building this sector. There's just a few trends which really give you some more context into the African fintech market. Then talk about some of the drivers of financial inclusion, which come from a study which we performed in 2018 and 2019.
Hello, Krish.
Yes, can you hear me?
Just a little bit like drop down in the last few seconds, but please continue.
Okay, just let me know if I should switch off my camera.
Okay, maybe you can try to switch off your camera to see if that might be better for the bad network bandwidth.
Hope that just keeps the call. Yeah. So I was saying I'd touch on a few lessons from M-Pesa, and then look at some strategies that we could introduce to really build the capabilities of the fintech providers. And so we look at incubation hubs, what could be done in their role, and then also look at the role of fintech associations across the continent and how they can develop the capabilities of the fintech sector. And then just to conclude with a few ideas on how partnerships between China and Africa could help spread fintech across the continent. So to begin with, I'd just like to first compare internet access in sub-Saharan Africa to China. Generally, what we find is that internet access is far lower in this region than what you'd find in China, with the highest level of connectivity found in Southern Africa. The first chart that you see on the top left from the ITU, we've looked at an average of internet access across a sample of countries across Central Africa, East Africa, Southern Africa, and West Africa. And you can see the levels are far lower than what you actually find in China, which is those red bars. And so the lower levels of internet access continued despite what we find high growth in mobile phone penetration. So if you look at the chart below, you can start to see that over the past 10 years or so, we've had increasing levels of mobile phone penetration, but it hasn't really been accompanied with as high levels in internet access. Another issue I'd like to talk about when we speak about mobile phone penetration is we need to think about the type of internet connection that consumers have. There's still a high prevalence of 2G phone connections at present. And but there is an expectation that smartphone usage will increase in the short to medium term. However, the costs of mobile phones must decline for this to become a reality. So with high 2G prevalence, there's a need for us to develop services which are appropriate for devices with those capabilities. And then another key issue is internet costs. Costs of mobile data, it's really a significant barrier to usage. So you must think of the total cost of usage, which includes both the transaction costs and the internet costs. So comparatively, in 2019, you could see the cost of 1 gig of mobile data in Africa was above 8% of the gross national income per capita across the continent, which is much higher than the approximate 1% cost which is experienced in Asian countries, as reported by the Alliance for Affordable Internet. And if you look at the map on the left, within Africa, there's a marked difference in the costs across countries. Looking just at Kenya and South Africa, you can see internet costs are more than 2.5 times more expensive in South Africa than it is in Kenya, which might also explain why M-Pesa perhaps was not as successful, or mobile money was not as successful in South Africa as compared to East Africa. In the previous graphs, I gave you some context about the technology environment in the African countries. But we as the HSRC, we performed a study into fintech in 2018 and 2019. And we looked at how technology promotes financial inclusion. And we tried to define the drivers of financial inclusion in sub-Saharan Africa. So we found it was crucial for us to really look at these drivers from both the consumer's perspective as well as the fintech provider's perspective. So in many respects, the supplier is new to the market and needs a great deal of support to provide successful applications to consumers. So for the consumer, there's a need for us to address those infrastructural issues which relate to access, the affordability of the service, the level of literacy, both general literacy and financial literacy, and also to concentrate on services which solve consumer problems and which go about promoting adoption. And that's key to building trust. From the supplier's perspective, we need to understand their capabilities, both from a technological perspective and from a business perspective. What are their capacities? Do they have sufficient capital and collateral to meet the licensing requirements? Does the regulatory framework is it suitably flexible to promote innovations? And does the supplier possess the knowledge of those local conditions to build services which are really targeted to the needs of the consumer? When we look at M-Pesa, some of the key lessons we've learned is M-Pesa addressed many of those demand side issues which I spoke about. It was accessible on feature phones, which are largely prevalent in Kenya. The USSD version didn't create internet costs. M-Pesa sought to maximize its value proposition using the limited functionality that it had available. And agent banking also made it easier for consumers to access cash and provide banking services in rural areas. And this provided financial services to the bottom of the pyramid, which has been largely neglected. And so a big benefit of the service was that it was widely accepted as a means of payment, which Paul spoke about. And so you could pay for a variety of services, be it taxi fare or paying for your utilities in shops. So the ubiquity of the service was really essential. In South Africa, when M-Pesa was rolled out, it was really marketed as a premium service with higher costs, and these are one of the reasons that it failed. So not really targeted to the bottom of the pyramid as was experienced in Kenya. Looking at technology hubs, so when we think about the needs of fintech providers, your incubation hubs and accelerators are really established to build the capabilities of this young sector. Our governments have invested money in these hubs, with about 80 technology hubs in South Africa and about 48 in Kenya. However, despite this investment, the incubators are still performing poorly, resulting in a very high failure rate in our startups. And we're finding about a 60% failure rate of startups in South Africa. So there's a need for us to really unpack the difficulties that the startups are experiencing and identify how we can actually improve the level of support offered by the hubs. One of the key issues that you find is that the hubs themselves are new to the market and don't possess the experience that they need to train your vulnerable startups. So the question remains is how do we strengthen our hubs to improve the quality of support that the startup gets as they start entering the market. Another key issue is Fintech Associations. Through our study, we found that one method for us to improve the capabilities of the Fintech startups in the sector is for us to start introducing Fintech Associations. Kenya introduced a Fintech Association late last year. Nigeria has a Fintech Association for the past few years. And what we find is that the association can really play a vital role in nurturing the Fintech sector. And it acts as a knowledge intermediary and can act as a buffer protecting the interests of startups as we start to negotiate partnerships and sharing knowledge. And through the association, one of the things that we can do is that as a sector, you can start to pool resources. And then we then depend on that intermediary to share knowledge about issues of social, cultural, political, economic, and regulatory constraints which are prevalent within a market. And by sharing this knowledge within the country and by sharing knowledge with the country and those from foreign parties, there's an opportunity for us to start negotiating partnerships on behalf of the sector and identify how best we can start to build trust and develop that shared perspective, which is really essential for partnership building. And then to conclude from my side, based on our study in 2018 and 19, when we asked our respondents in our study, how could a partnership with China in particular help to increase the spread of fintech in South Africa, in Africa? One of the key issues which emerged was that our respondents recognized the maturity of the Chinese fintech sector and the opportunity to learn from Chinese experts. So such knowledge would really be valuable for fintechs to help scale their product offerings and increase their impact in the market, which will help us break the monopolies which Paul spoke about. There was great interest in partnerships through a Fintech Association, through supporting hubs and accelerators. Partnerships could help fund ideas reach the market, particularly supporting those from that conceptual phase. Partnerships would also be very useful to help the fintechs themselves, the innovation hubs and the labs. It can help access and distribute low-cost digital devices and contribute to the reduction of internet access costs, which is a significant barrier, and help to make mobile banking more affordable, which will reduce those transaction costs, which is one of the other barriers. And then another issue which emerged was the launching Taobao marketplaces in Africa would be a very useful way to start to build trade across the continent. And so supporting those sorts of services would be very useful. Thanks. Those are my comments, not all for Paul, but just to really build the conversation so that we just get a better sense of what's going on in Africa.
Okay, thank you very much, Krish. And I really like that the way how you outline like the fintech ecosystem, and I believe that the trust that you just mentioned between China and the African country, how like the trust could bring the value and to accelerate the fintech industry. That is very important element. So I think that we a little bit run out of time, but maybe let me take this opportunity to pose one question to all of the participants, as that we got the question from our audience, and that is from Edward Bryan. Thank you for the insightful presentation from Paul. Trust is still an issue in Africa. How are the players of mobile money operate dealing with the issue of mistrust to increase financial inclusiveness? So I think maybe based on this question, I want to ask each of you. The first one is, how do you see like the trust, the role of the trust play in the fintech And this is the first one. And the second one is how do you see the trust in your jurisdiction and its collaboration with the fintech. So Paul, would you like to kickstart for response for that?
Okay. I think that's a very good question, actually. My experience, and like I said, I did try to compete against mobile solutions as a bank manager when I was still in the banking sector. And one of the things we came across that the problem for scaling of new solutions is about trust. So consumers take time to actually accept a solution because they're giving you your money and they're storing it with you. So it takes time to actually buy into that. And I think even if it wasn't for the election violence in Kenya, probably that would not have happened as quickly for Safaricom as well. What we're finding is that as it picks up in certain markets where it becomes more acceptable, then people easily trust the value of what they're getting, what they're exchanging for on the mobile wallet. So I think for me, it's an issue of level of maturity of the industry. But the other thing that would be key is the regulator sort of coming out strongly to back it so that it assures people that if anything happens, they're able to sort of like have some kind of fallback. The other one would be around the type of institutions. And I think that's why they tend to be the bigger recognized brands that tend to launch these things and work well. So I was working as Deputy MD of Housing Finance Bank, and we launched a similar mobile wallet, which was agnostic of telcos. But because we're a smaller bank, it actually took much longer to get confidence in people's minds that that can work. So I think the type of institutions as well that you partner with is going to be important. So I'll leave it there for now and see what others have to say.
Okay, so Joseph, as the legal scholar, how do you see the trust and what's its importance to fintech?
You mean trust in law? Well, I think it depends what we mean by mistrust, and we mistrust in what? In how central banks issuing money, or mistrust in how the financial intermediaries manage the money, or we mistrust the partners that are involved in the network, including the enterprises, or we actually we mistrust the government that's using this tool to conduct capital surveillance, to survey our daily lives. And so what kind of mistrust we are talking about, and then mistrust in what aspects? I think that will be quite important to highlight. And again, trust is something quite subjective. Whether I trust you or not, it depends on my background, my upbringing, or what I was told, and in the value that I have internalized. For example, if I think that my personal information is very important, then if you use my personal information, then I mistrust you. For example, if you take a photo of our meeting now and post it on your Facebook or on your WeChat, if I'm okay with that, then I wouldn't say that would be a breach of trust. But if I think this is something very important to me and you did it without my consent, then I think that would be a breach of trust. So I think that subjectivity is quite important. That's my thought on that.
I completely agree with you. And also, the trust that we mentioned, the paradigm of the trust is also always being redesigned. If we look back like 100 years ago, how people borrow the money, that really relies on people's reputation, but coming to the contemporary, maybe we will too much more care about your personal credit, and turn into the digital world. We see whether we want to approve the loan application, maybe we based on some alternative data. For example, that your social activity on the network that you just mentioned, the Facebook, the WeChat, and also maybe like the expression that you use on the internet. So Paul, how do you see the issue of the trust? I mean, particularly in your region, Do you see there is any difference?
Actually, I'm thinking maybe I really agree with everyone that in the fintech world, maybe trust it can be interpreted to like in many ways. For example,
and maybe you could put it more specifically, as Joseph just mentioned, as the central bank digital currency is getting popular among the world, and how do you see the trust will be, the role of the trust will take the role with that?
Yeah. Actually, what I'm going to say that I mean that actually trust is involving in everything. For example, if the platform or fintech platform want to provide services or something like this, they also need to create a trust. They need to treating customers fairly to create a trust, right? And also especially for the issue you just point out for DLT or distributed ledger technology that or blockchain technology that get involved in many services or even like government or public and private sector. I think this is also the things that maybe we trust in the system or we trust in the DLT. If not, we trust in anyone that is really different from the centralized governance, right? So yeah, this is, I think, trust is really important. Yeah.
Okay, thank you, Paul. How about Krish?
From my side, I touched on this in what I said earlier. If you look at trust in fintech applications, one of the key issues that we find in South Africa, for example, there was a question in our census actually asking why do people not use the internet? And one of the predominant answer was that people don't find a use for it. They don't think it's actually relevant to them. And I think that actually plays in the fintech sector as well. Consumers are not finding services which are solving their problems. So if we go about producing applications which are targeted to the needs of the masses, of those low-income consumers, I think that will be really essential to try and overcome that barrier of trust, where you can start to prove value to the consumer, and then that would actually start to increase usage and build trust as more people start to adopt those technologies.
Okay, thank you very much for that. So once again, thank you very much for Paul. Today, your fascinating keynote speech and also the insight from Joseph, Krish, and Paul. I really enjoyed the conversation. And may I also take this opportunity to make the announcement for our next webinar. So for those of you following us today, we are going to have the webinar tomorrow, and with the focus on the fintech regulation and the development in Uzbekistan and Tajikistan, and let's see what's happening in those regions and what kind of opportunity that we probably can take from that. So thank you very much for joining us today, and I hope to see you in person, maybe in Nairobi, in London, in Cape Town, or in Bangkok. Thank you very much.
Yes, thank you very much.
Have a nice day. Bye.
Okay, you too. Bye-bye. Nice meeting you all. Bye-bye.